Well, joining me to discuss this and more is Bill Hall, President and Managing Director of Plimsoll Mark Capital. Bill, thanks for joining us.
Thank you, Michelle.
Bill, the CEOs are clearly fed up with Congress. Do you think they're going to have any luck in pushing any kind of action through?
I actually do. I think the markets are already anticipating the fact that we are going to get some relief. If the fiscal cliff is implemented as expected, you're talking about a 5% reduction in growth next year, and the markets already absolutely don't see that. I think what we're going to do is we're going to see some kicking the can down the road, and we're going to end up with a 1 to 1.5% drag on GDP.
So you think the Obama administration is going to come together and put something on the table?
I think whether it's the Obama administration or the Romney administration, somebody's going to come together who is ever elected in November is going to come together with a plan, and Congress is going to kick the can down the road.
But
again.
nothing until in 2 weeks' time.
Nothing.
Now, they're talking about something that resembles the Bell-Simpson plan. They want some cuts and a little bit of tax reform. Overall, do you think that kind of plan can work? It's different from Romney, which is revenue neutral, but more aligned with the Romney plan than the Obama plan. Do you think this is the general framework we should be looking at?
Well, Michelle, first off, you have to understand that I'm an optimist. But I think that no matter what happens, with whoever is elected, the issue are not around the edges here. These are big issues that we're dealing with, and neither plan is going to be able to solve the long-term issues here, which is too much debt and the need for reform of social welfare programs just by nibbling around the edges.
Well, Goldman Sachs saying that they put out a note that the fiscal cliff is more likely to be avoided if Mitt Romney is elected, and Goldman Sachs is putting the fiscal cliff at 3.5% of GDP. You agree with Goldman Sachs on this?
I definitely agree with Goldman Sachs on this. I put the fiscal cliff at 5% of GDP. I think what we're going to end up with is something 1.5% of GDP. But again, I don't think it matters whether it's Romney or Obama. They're going to have to come together with a plan because nobody wants to see the fiscal cliff implemented fully.
Now, regardless of the fiscal cliff, we're dealing with an earnings cliff. We have had some very bad results this quarter. Apple, Amazon today coming in missing estimates, 3M, Xerox. A lot of the big multinational companies like Caterpillar reducing their forecasts. Are we on the brink of another recession? What should we be taking away from this corporate earnings cliff?
Well, I think we are very close always right now, walking that tightrope with another recession. But again, I'm an optimist, and I think a lot of these earnings announcements and these disappointments are a lot of ado about nothing. I think it's a lot of inventory adjustment. I think it's a lot of accounting adjustments on the balance sheet, and I think over time you're going to see those earnings rebound. So
you do not see a correction in the markets happening in the near future, seeing as you're an optimist. You're still very much thinking we're in bull territory.
I'm not predicting a new bull market. I think that we are going to have a liquidity-driven rally, that pushes the markets up. And then at some point, late next year, we're going to have to deal with the issues related to social welfare spending, and that's going to cause the market to correct.
All right, kicking the can down the road, but in the meantime, an optimist. Our thanks to Bill Hall, President and Managing Director